The Alberta Mortgage Broker Association, Ms. McDowell, President, and Mr. Maji,
Correct. Yes.
Vice President.
Thank you, Mr. Chair. My name is Catherine McDowell, and I'm the current president of the Alberta Mortgage Brokers Association. With me is our past president, Adil Maji, both licensed and practicing mortgage brokers in the province of Alberta. Also joining us is our executive director, Amanda Roy. We appreciate the opportunity to share our thoughts with this committee. The Alberta Mortgage Brokers Association is the oldest mortgage industry association in the country. For more than 40 years, AMBA has been the voice of the province's mortgage community, including brokerages, lenders, insurers, and industry service providers. More than 2,200 mortgage brokers representing 377 companies make their living in our province by helping Albertans achieve their dream of home ownership. Canadian mortgage brokers represent $80 billion in annual economic activity and are changing the landscape of mortgage borrowing for the next generation, with 50% of first-time homebuyers using brokers. In Alberta, our members contribute heavily to the provincial economy by arranging financing for new home construction, resales, and refinances for home improvement and debt services. Mortgage approvals alone in the province generated more than $30 billion as far back as 2010, according to Stats Canada. We are seeing firsthand the negative impact to the mortgage rule changes across Canada, especially to the Alberta consumer and economy. The unintended consequences of what we believe are mostly unnecessary changes at this time are resulting in a weakening of the middle class by transferring wealth in the form of higher interest costs and mortgage insurance costs for the consumer. Alberta has been the poster child for what regulators fear: 2 years of solid recession. According to the regulators, these changes were made to protect consumers from any impact resulting from higher unemployment rates or interest rate increases. We are not against a stress test in some form, although not as it currently exists. But our province has already been a test environment for the effects of unemployment. Prudent underwriting rules previously put in place for those very reasons have already given us the ability to weather that storm. In 2014, Alberta had an unemployment rate of 4.7%, and the number of households in arrears were 0.27%, which was just under the national average. By 2016, our unemployment rate had drastically increased from 4.7% to 8.5% by the fourth quarter, and the number of households in arrears was 0.41%. So an 81% increase in unemployment between 2014 and 2016 resulted in a relatively moderate increase in delinquencies from 0.27% to 0.41% in that same time period, according to CMHC data. At this time, we don't even know the impact of the wildfires in Fort McMurray in May of 2016, but according to that data, Q2 reported a 0.37% of delinquencies, and that number jumped those last few percentage points to 0.41 by the end of Q3. So we ask, what are these changes really protecting the taxpayer from? We consider the stress test to be a prudent underwriting measure to protect the Canadian taxpayer. However, we do feel the newly introduced qualifying rate and how it's calculated is too severe at 200 basis points higher than the average contract rate. For consistency across all mortgage applications and for consumer protection, we'd like the government to consider slightly tweaking the qualifying rate and how it's calculated in order to better reflect market conditions. As an example, a potential solution that could be explored is contract rate plus 1% to be applied across all mortgages. Other presentations to this committee have previously explained how securitization works, but what hasn't been explained is how it directly affects the middle class. Since October 2016, those attempting to buy a home without default insurance have been adversely affected by the transfer of wealth due to increased interest rates from this policy. This is also true for those refinancing. For example, a middle-class first-time buyer from 10 years ago who has equity in the home and needs funds to renovate in order to move his aging parents into a fully developed basement is forced to pay more to do so now. Refinancing for this purpose or for other investments typically helps build wealth in the household. The policy change of removing refinances from portfolio insurance will cost these individuals more through increased interest costs, resulting in a decrease in the potential middle-class wealth. Canadian consumers are now forced to pay more for their mortgages because of the new OSFI guidelines, which make mortgage insurance more expensive to the lenders. as a result of the requirement for mortgage insurers to hold more capital against the mortgages they insure, we have seen mortgage insurance premiums increase for both low and high ratio mortgages. The effects of this increase on mortgage lenders, both bank and monoline, has been to build that cost into the interest rate charged to the mortgage borrower. Today, we are seeing discounted interest rates on all high ratio insured mortgages. However, for any low ratio insured mortgage and any uninsured mortgages, the cost of implementing the capital requirements have been passed on to the mortgage borrower to bear by way of increased interest costs. Interest rates have been adjusted to reflect the added cost of portfolio insurance or the added cost of capital for lenders to hold these mortgages on their balance sheet. These increased costs have resulted in the increased Canada Child Benefit nearly negated in some cases. If a consumer claiming the Canada Child Benefit for a one-child family makes $90,000 a year, their tax savings would be approximately $1,120 per year. If they have an uninsured mortgage, they would have to earn nearly $1,100 more to pay the additional interest costs on a $400,000 mortgage. For the high-ratio consumers putting 10% down, due to increased insurance costs, their future home equity decreases by $2,700, which is reflective of the amount of an extra premium on a $400,000 mortgage as well. In closing, there are 5 areas we would ask the committee to consider making changes to the new rules. We ask that you reconsider the re-inclusion of refinances in portfolio insurance. We recommend the modification of the current stress test to a more market plus approach. We ask you that you review the increase to the capital reserve requirements and ask more questions about how it was balanced. Alberta, for example, had a significant increase to unemployment, topping at 9%. What was the increase in losses year over year for the insurers? Was it proportional to the increase in insurer capital requirements? We also request a study into the potential effects of regional-based pricing for insurance and consider the effects of regionality as part of the risk-sharing model. We believe that over time, it will become very detrimental to Canadians in economically challenged areas where stimulus is needed, not added costs. In moving forward, we would also ask that the Alberta Mortgage Brokers Association, as well as all stakeholders who have testified to the Standing Committee on Finance, be considered key stakeholders to be consulted when reviewing all real estate finance changes in Canada. Thank you, Mr. Chair, for your time. We are prepared to take any questions you may have.
Asking you any questions, gentlemen and madam. Just want to make that I'm very pleased to see how cautious our colleagues from the government party are so prudent when they talk about debt and they talk about limiting the risk, while this government, if nothing changes, will go to a debt of $1.5 trillion in 2050. So what is good for Canadians will not be good for Canadian government. We have to be more very concerned with that. So, gentlemen, madam, just a question to everybody of you. Were you consulted before the call of the minister in October?
I'm sorry, I didn't hear.
No, we were not consulted.
No.
Mr. Morris?
No, we were not.
Madam?
No.
When were you informed? And how were you informed of the call of the minister?
Via email.
Sorry?
Via email.
Email?
And
Okay.
the media.
Email from the minister or from?
Oh, CMHC sent out.
Okay, so you're working well.
It was an email to the industry.
Okay.
Sorry, an email to the industry is how it was communicated to the broker industry.
Yeah, most stakeholders in the Canadian housing market, realtors associations, monoline lenders, the 2 secondary insurers in Canada, the large distribution networks were notified via the media announcement.
Mr. Simonson?
Same.
Okay, so thanks. We have a good media people to inform you of the major decision. And as we had said a few minutes ago, Mr. Morris, it has huge impact.
Mr. Caron.
Just to be clear, because Ms. McConnell asked the question, but you weren't informed or consulted for this round of changes. Is this usual? Are you usually consulted with regard to this kind of changes to the mortgage market?
In most cases, it is constant or common knowledge or common behavior for government to consult the industry. I can speak on behalf of Mortgage Professionals Canada, whom you guys have seen earlier as a witness here in this committee. On a regular basis, they were consulted and did lobby in Ottawa and did have representation, speaking with the ministers in previous government, unlike these last changes where no one was consulted.
Donc, c'est habituel pour vous d'être consulté et de chercher à être.
So it's usual for you to be consulted and seek to be consulted?
National Association, and yes, they usually are.
Follow up on that, and I'll not take from your time, but what's been going through my mind, when there's a lot of secrecy around a budget, and there's very good reason for that. On this specific decision, was it not important to, I guess, not let out of the bag in any way the decision that was going to be made and its impact it might have on the markets? Was there a valid reason for not on this specific question consulting with the industry in terms of what that might do to the markets?
Absolutely. I can speak on behalf of Albertans. My colleague Katie spoke and testified that for the past 2 years, Alberta has been suffering, unlike the rest of Canada. We were a hot market for many, many years, and for the past 2 years, we've seen the complete opposite, a reversal of our fortunes. And what these new rule changes have done are just kicked our province while we're down. There's no better word for me to explain it. It's we've pushed out, to answer your question, Ms. O'Connell, I said the bottom 20% of home buyers I can speak on behalf of Calgary, as they just cannot afford to buy in Calgary because there are no homes priced at under $150,000 when they were previously qualifying for $225,000 to $250,000 condo. They're being forced to go back and enter the rental market, where we are even seeing higher vacancies due to lack of jobs. People can't afford to pay rent. They're moving back in with their families. We're seeing multi-generational housing being the forefront of, I can speak on behalf of my business, where people, I'm 32 years old, and they're moving in with their parents, and their parents are legalizing their suites.
Adele, though, that's the consequences of the decision. What I was asking is,
I was explaining the reason why we should be consulted.
In terms of the secrecy around the decision, that may have been necessary.
I still feel that you can speak to associations in confidence. If you needed to close the meeting, I still feel you need to be able to consult professionals, because we are experts in our field and we're here for a reason.
Okay, that's fine. You have 4 minutes left, Guy.
Thank you. On this, I would say that the finance minister actually consults regularly prior to budgets to get information. Doesn't mean that the measures will be in there, but if he wants to actually have a measure in the budget, you might actually ask questions about that specific measure to some stakeholders as well, which is, I think, the point we're trying to get across here.
Thank you, Mr. Chair. I just want to quickly address the point about consulting and publicly traded companies and how that might impact and all that kind of thing. Most of us, at least that were there on the call in Kelowna, we were just before doing pre-budget consultations, heard directly, because Mr. McColman asked specifically, did you consult? And finance officials confirmed that they did not do a formal consultation. They said we would not call it a consultation, but we did discuss it with some banks. So, Mr. Chair, for anyone to say that that this is all about keeping, that protection so that no one gets an advantage of it, that's ridiculous. We heard that, and I would just refresh that into some people's minds. Consulting can be a very good thing. Yes, we did take some measures after 2008, which many people pointed out to me was the ultimate stress test. And we hear from Ms. McDowell today. She says 81% increase in unemployment in Alberta, and going from, I think, 0.26% for default to 0.41% of 1%. Default shows there's a huge resilience within the system. So anyway, for people to be saying this is about debt, the system itself, because of the prudence of the people in the business, is what is given us such a good system. And yes, some adjustments could be argued, weren't always well received by the industry. They have said themselves, they have never seen this. So I have a quick question. We had Carolyn Rogers from OFSV come in, and she told us that OFSV's policies are regionally neutral. So it's my understanding that when the new capital requirements, they specifically use location in their formula. Is that correct?
It is, yeah.
So what are we not getting here? Because they say it's regionally neutral, yet they take and assess as part of the formula where a home is located.
The costs are not regionally neutral. The costs are spread across the country. Alberta may have a lower risk than BC, but it's the same cost to refinance a home, an uninsured mortgage to, or purchase a home with 20% down or more for somebody from British Columbia as it would be from Alberta or anywhere else in the province. The cost to the consumer is the same.
Thank you all for your presentations. We will suspend for a few minutes while the next witnesses come to the table. Thank you all for your presentations and your direct answers.